Good morning, everybody. Mike Vacchi, Princetontrader.com, here for ntmarkets.com with your Tuesday morning pre-market webcast. Okay, we spent a lot of time on the daily chart during the evening recap last night. So what I've got up here for you is a 15-minute chart of the ES, and I just want to get a little bit of a sense of where the playing field is going to be today with respect to the trade. Yesterday about 11 o'clock, we tested 1705. We had done 1705 back on Friday, tested that, and then, it wasn't, it really was price rejection. We gave 5 handles back, came back to make a lower high, and we started to bleed lower in the overnight. The 3-day pivot stayed underneath it, though, 1697. Now, we did a nice little move in the middle of the night from 98 back up. We traded as high as 03 half. Still could not take out 1705. So the key in looking at this for me is we've had 2 or 3 attempts now to take out the 1705 from Friday, and there's just no there just seems to be no rush to get that done. And it's indicative of the bulls running out of steam a little bit. What is key to me is, can the bears push it, though? As important as the daily pivot was yesterday, it does not seem to be very important today. What is important is the 3-day pivot. So if you're a bull, you want to see 97 hold. You've got the weekly pivot underneath 95. You've got 95, then you've got 92. Now, once you get below 92, then you have to come out on the daily and say, where is the middle band, which is back at 84. So are we due for a bit of a retracement? Yes. Is it going to be a major retracement? I don't know. A lot of that has to do with what the bears do with the middle band, and then what the bears do with 1670. If both of those levels go without much of a fight, then you're opened up to the lower band below 1660. You have the 50-day exponential moving average coming in 1652. So I am giving you some targets for a pullback. And what's prompting me to do that is the inability to get through 1705. Now, conversely, if we do get through 1705, then you have to start looking at areas 0675 should be significant. Then you've got 1709, 1714, 1775. Back out on the daily, though, I really think at this point any move higher is going to be pretty muted. Even if we do break through the upper band here, which is now trading down at 1708 quarter, it's going to run into the third standard deviation band at 1720. And I really want you guys to view that 1720, that third standard deviation band, or wherever it happens to be at the time. If there's a big pop, that third standard deviation band should cap this move. I'm not saying cap the market forever. I'm not saying, we're never going up again. What I'm saying, though, is if it pops to the third standard deviation band, that should cap this move. So you've got some parameters on the upside and the downside to deal with this market. Yesterday was a complete snoozer. Complete just waste of a market day. We did not do much at all. That's going to happen in the summertime. Maybe today you'll have some movement. Maybe today will be another snoozer. What's key, though, is you have to control your awareness of whether you're in a day that's going to have the kind of volatility where you can really trade it, or if you're in a day that really isn't going to move. Because trying to trade 10, 12 times in a day that isn't moving to try to make, a few handles, your winner is your broker. So don't do that. Okay? Just understand the kind of day you're in. Okay? All right, everybody have an amazing one. Mike Vacchi, Princetontrader.com. Check out the website. Check out the chat room. Take a trial. Come check out the levels. We're offering those now as a standalone. If you'd like to take a trial and check out the levels that we use every day with our subscription service, that's up on our website as well under products. And I will be back tomorrow morning with another webcast, and tonight with the evening recap. Trade them well.